welcome to the closing beat, everybody. Happy Thursday to you. How's it going out there? Hope you're having a good day here. We are financial advisors at Jazz Wealth. Hope you check us out at jazzwealth.com. Other advisors have fancy Christmas parties. I was like, what are we going to do? Man, Top Golf. We're going to Top Golf. So our Christmas party is going to be at Top Golf. Get a little loose, hit some golf balls, right? Ready for that one? While everybody, all the other advisors are like, we're doing, staying at the nice hotel and all that. Let's hit some golf balls, man. It's been a while. Anyways, welcome here. We're hoping to teach you a little something here today. And also tonight, Eric will be teaching you our Wine and Wealth. So if you're a client, Wine and Wealth tomorrow or tonight will be on all the geeky details of velocity banking. Ooh, examples and all that stuff. Does it work? Does it not work? He's going to go through and explain all of that. I hope, right? That's where we're at right now. He's been prepping all day there. Anyways, let's get right into it and try something a little bit different here today. For the S&P, we're still inside of that range there, right? Nothing new going on there. Same, I would say a little different today. We had a lot more support from the broad tech space, not just those 7 names. So that's always good. You get more of a rally that can hold. Let's show you. I'll give you an example. So if you go over to like a 5-minute chart, you'll, especially this time of year, this is what you see. Okay, so here's the start of the day right here. So your morning activity up until the 10:30, what's known as a reversal time, and between 10:30 and 11:15. Once that sort of hits, notice how we just kind of calmed down and there wasn't a lot of action until the end of the day. That's actually very common. And you get that when you have that broad support from the stock market. In other words, if the top 7 stocks are leading the way and 2 of them just fall in the middle of the day, well, we just saw that, right? Then you end up with a market that could be a little more choppy. Well, when there's a broad participation in the markets, you know, some of them can fade away and it's not going to weigh on things, right? And so really sort of a crystal clear day for like the day trader or somebody who doesn't like volatility. Pretty simple there. I'd also like to show from like a heat mappy kind of a way. We've got all the 11 sectors on here, and you can really clearly see tech as it was uniformly higher. AMD helped. We'll talk about that. Communication services, which is, you know, it's kind of like tech, right? It's more tech heavy anyways. Very strong, but then look around. Banks doing okay, real estate hanging in there, a couple news-driven events there, basic materials doing okay, lightly some news events there. Energy holding back just a little bit with healthcare, but other than that, you could really look at today and say, hey, you know, that's a broad, thick supported market type day. The way you actually say it, if you want to be like traditionally nerdy about it, is there was more breadth in the market today, right? Whatever. So if you look at where we stand here, we now know, and we've been talking about how the stock market likes to stay within a range actually throughout the first part of the month. So here's all of December. And so we know that there's going to be this back and forth, not really much more than 0.5% down back to 0, 0.5%, etc. And that's where we stand right now. So through the month of December, we're not really even up 0.5%. Here's kind of the top end of that to show you where, you know, there's not much more to be expected beyond that. You'd be overpaying relative to a historical average. So, right? What if we go up there? We got a jobs number coming out tomorrow, so that could be a little bit of something there. But for now, the stock market is in average mode, they would say. If we look at the NASDAQ here, there you go. It naturally outperformed the rest of the market today, and that's totally understandable because it had a broad participation in the tech space and a little bit in the biotech space as well. So that rally holding up, and intraday, it would be the same thing. A little bit of action in the morning and then quiet through the afternoon, and then that afternoon, late, last half hour type action that you see. So not, you know, not the most impressive day, but still a positive day. So we're okay with that. And that was your outperformer, by the way. If you look at the Dow, same thing. It is chopping around near highs. Remember, it don't have to pull back, but certainly that'd be welcome. But obviously it's done a lot of work, taking a little bit of a break. And the Russell 2000 saying, we're not done yet. Small caps still trying to participate in this most recent rally, which has gone from oversold to overbought rather sharply. Speaking of overbought and oversold, you know how I show that chart with you guys every now and then with a percentage of the S&P that is considered overbought and the percentage of the S&P that's considered oversold. Well, a lot of you think that that's for timing. And it can be. I mean, if you like using tools like that and just having a simple thing to look at to make a decision market-wise, all right, that's fine. But we can see something else here as well. So we know that the red line is the percentage of stocks that are overbought. We know that when the percentage of stocks that get overbought pushes above that 60% area, you may want to keep an eye out on some of the things that you're doing, right? Expect a pullback, start getting your mind wrapped around that, and you would know that's totally normal. The green line represents oversold stocks that are on a price basis discounted, right? They just haven't been able to get anything going. Well, what happens when you see the two start to come back together? It is not just for timing. You can look at this and see what other people are interested in. Other people right now are less interested or are selling overbought stocks and immediately coming down here and buying the oversold stocks. They're buying the discounts. They're looking for, on a price basis, they're looking for value. So when you look, you go, right, I can see that there's some money there. It's not just profit taking on the overbought stocks. It's profit taking and then putting it back to work because the oversold stocks are starting to bounce as well. So it's kind of a fun thing to look at. There's no magic or science behind it. It's really just plotting two simple things on a chart if you'd like to follow along. All right, let's talk about some nastiness here. So gold, middle finger. All right, we talked about the middle finger in gold. It doesn't have to be just gold, but gold has a habit of doing this, and I didn't get a chance to elaborate yesterday. So the middle finger is still intact, meaning if you look at it and picture it like a hand, you just draw out what the hand would look like. I'm not going to do it, but you got your knuckle, right? And then, oh, there's the big middle finger. Do you expect, when you do that to somebody, does the middle finger go up and then back up again? No, you present the rest of the hand, right? And so gold actually does this quite a bit. This would be the fourth time in less than 3 years that gold has hit a new high and rapidly retraced there and just came all the way back. The last 3 breakouts prior to this one, because this is just about a 5% pullback so far, the last 3 ones represented a 12, 19, and 23% pullback, and here's what they look like. So you can see it clear as day when you look later. We got a big old middle finger there, and then we go back into chop, and it's pulled back. We do nothing for a while, and it breaks to new highs again, only to pull back. We do nothing for a while, start to rally all the way back. We break out to new highs, and then it starts to pull back. This is the GLD. To see the actual breaks to new highs, you need to use the gold futures. This is on a closing basis with the GLD, so just that's why it doesn't quite make a new high there. But we have a pullback. Does that tell you that gold is not a good investment or something good to buy? No. No, it doesn't mean that at all. It just means that if you're going to look at gold, buying a breakout is a tough long-term strategy, right? Now, there's people that do this. There are stocks that break out. That's a whole strategy on its own. But to look at gold and say, when it breaks out to new highs, well, that must be a good thing, and I'd like to participate. Well, statistically, you would be wrong. That would be a poor time to buy gold. Whereas on other things, individual stocks and commodities and other commodities, when there's a breakout, it usually, hey, clear skies ahead, happiness. Everybody's like euphoric. Let's buy that. Well, gold, we now know, doesn't do that. And so be very careful when you do things like that. Okay, let's take a look here. Bonds and notes, right? We look at the 10-year back to the 200-day moving average. The rapid rally here, we know, is not anything unique. I shared that with you yesterday to talk about that. But remember that, like, why am I even pointing this out? You know what I mean? Like, do we care? You guys, you have portfolios. Do your portfolios have short-term bonds? 10-year yield? Are you participating in that? Well, probably not so much. You may have them in ETFs and cash positions and things like that. But remember that the bond market rally that we're looking at, the reason why it's so interesting is not just because the higher it goes, the lower the interest rates, and therefore we can take on consumer debt or, buy a house or something like that. That's a retail way to look at it is, well, okay, great. Yeah, the interest rates are lower. Maybe I make a decision to borrow some money to do whatever you're doing. But remember that the reason this is so interesting, and we talk about this every day, is because the bond market is competing with the stock market, right? Remember just a little bit ago, you didn't need to be in the stock market. Why take risk when you can get a high yield? And so when interest rates go down, meaning the bond prices go up, the stock market gets more attractive. it is now competing less. It looks better than the bond market. And that's really why we point this out on a daily basis is, down in this area, you go, well, shoot, I'll take some of my safer money and I'll just go over here and get my guaranteed return. Well, as those rates disappear and you can't participate as much, now think about that. The average person, well, I'll put a little money in the stock market. That looks better. I'll do that. Well, times that by millions and millions of people. Times that by the thousands of companies that are public that say, we were going to take on some debt, but not at that rate. Hey, it looks a little bit better. We'll take on the debt now so that we can grow, we can invest, buy stuff, do whatever. Very, very interesting there. So that's one thing I think about you guys at night. And I'm like, I could have been clearer on that. Maybe there's something extra to it. And there you go. All right, I'll take your questions here in just a minute. We're going to try something a little bit different. Ready? Dollar General. All right, Dollar General had earnings. You could see the actual move there today. It started with a gap higher, finished lower. Rather than just rattle off the earnings and tell you what happened and you guys go, is that good or bad? I'm going to pretend that I don't know anything. And I've read through their entire earnings report. I'm going to test this on you guys today. If you like it, we'll do it for everything else going forward. All I have to do is listen, pretend that I'm listening to the conference call and I know everything about the company. And now I'm going to tell you guys as if I have no clue what's going on. I'm going to be a translator of sorts. So Dollar General, our sales were down just a little bit there. Actually, our sales were down in every category. Turns out that we actually categorize our sales by home, consumables, apparel, and seasonal. So when you look at our balance sheet, we have those 4 categories. When we compare sales to all of them, well, they were a little bit down. But it's not a big deal because we saw more traffic in our stores. Right? So the average ticket, like the average sale on the register was down, but we saw more traffic. So that kind of offset it. Add to that, the cost to transport the things that we sell to our customers, that was cheaper too. That's the price of oil there, if you want to know. Our gross margins, meaning the profit margin before all taxes and everything, was down just a little bit, but it's still 29%. And part of that's thanks to the low transportation costs. So we're thankful that oil is down. We also happen to notice that we've taken some business from our competitors. We're Dollar General, so you know our competitors there. But we noticed something in particular. We took business from our competitors, but since we categorize our sales into 4 categories, we can see that it was consumables, meaning people were buying food at our stores, and they chose not to buy them at the other brand name stores that I won't mention, right? We realized that that's something interesting, and so therefore, we were going to build 800 more stores. It was originally 990, we've changed it to 800. However, we did that because now these 800 stores, we're gonna make just a little bit bigger so we can put more coolers in the back because this is a trend. People are coming to us to buy food, and so we're gonna put it more coolers so that we have more food to buy there. We're also gonna remodel 1,500 other stores, but don't worry, we'll have that expense paid back within 2 years if we follow this up and people continue to buy more consumables from us. And of course, hopefully their costs stay down as well. So there you go. There's like the story time stock market update. I just thought that'd be kind of fun to try a little bit different and see if that helps you decipher, dissect, right? Understand their earnings a little bit better than just going earnings beat by, or actually earnings missed by 10 cents there and EBITDA, blah, 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 right? Let's just tell you how it's going. AMD is another fun one here. That one kind of was the talk of the town today, or talk of the street, as you should say, because they said, we got an AI chip that beats NVIDIA's premier AI chip. We're going to sell a unbelievable amount of these. And people are like, are you the new NVIDIA? Oh my gosh, should I take some money from my NVIDIA and go put it in AMD because of this? Yep, that's come up. GameStop. This saddens me a little bit. GameStop beat on earnings. However, we didn't expect a whole lot there. What bothers me is the news headline is that the CEO, who has a separate company, and then he bought 12% of the shares of GameStop. It's the guy from Chewy. I can't remember his name. How's that going, by the way? It's the guy from Bed Bath & Beyond, which went bankrupt. So anyways, he owns 12% of the company, and he's like, you should just let me take the cash that we have in the bank and trade stocks. Like, that sounds like a good idea. And I'm saddened that that became the headline today because it takes away from what we thought you were going to do with the company. And a lot of people are upset by that. They're like, well, if you're going to use cash to trade stocks, then why not just buy your own stock back? Which they have a little bit, but it's what it is. Chewy's earnings came out as well. Not great. And we kind of saw that coming. Remember Petco? Not necessarily the same thing, but that's what you get. Nike, Tiger Woods, maybe, is that a thing? Is Tiger Woods maybe going to end the Nike partnership? Oh. Okay. And JetBlue. JetBlue basically just said, oh, man, our bad. So before we told you we weren't going to make as much money, we were off. We're going to make like this much money. It's not what we said we were going to make, but we basically told you we were going to make this much. Now we're just going to make that much. So really simple there, and that is good news for them. Oil prices, right? Oil prices, helpful for the airline companies. All right, let me pop out this thing here, see if I can take your questions. Wine and Wealth tonight. If you are going to hang out with Eric, he will be ready to help you with velocity banking there. Costco keeps climbing. Does it now. New highs. Good for them. Yeah. Costco doing well. I didn't really see a question there. South Carolina, you guys like pining over the summer season already? We're just getting into winter? Jeez. Did your story come from reading their 10Q? No, it's a combination of about 40 different sources, analysts, I don't know, breakdowns, if you will, all piled into, if you could imagine AI just going out and reading everything and then just telling me what I need to know. It's essentially that, but I don't think it's AI driven. Kind of scotch do you have at the, oh, you can see the bar, that's right. Those are all fake. We drank all that years ago. It's just tea. We just filled it up with tea so people wouldn't think that we were alcoholics. You know what I mean? A jobs number is coming out tomorrow. That is correct. And so remember, Friday, in the lowest volatile type month that we can have of the year, we know all that, showed all the stats there, and a jobs number that people don't expect a wild variance there. It's not going to beat to the upside by 1 billion or something. It's not going to go to zero. Like there's no real range there. The range is really tight. So expect you have a gap from the stock market in the morning, and then it very well could be that is all that happens from there. Yeah. Hey, I don't know if you can't talk Florida boy. I see you, MW. I don't know if you noticed, been wearing the same sweater all week. I got one. One sweater. We're actually looking to order more sweaters because this cold just won't go away. Tea is an old Hollywood movie trick. Yeah. Yeah, it's true. But to be fair, I used 2 different types of tea, so that they're different colors. Yeah. I know. JW, where'd you go, man? JW with your, I need an update, man. What'd you decide to do there? Got it. You tell me, I'll tell you. I haven't had a chance to go through DocuSign yet. No, I did see they came through. Oh, by the way, I didn't even give you. Nope, there are no earnings tomorrow. Yeah, nothing of any meaning. Just the job numbers there. Expectation for a slight decline there. Private payrolls. Where's the average hourly earnings? Or average hourly work week? Where'd it go? The average weekly working hours is expected to go down just a touch, 34.3 hours. Where did they get these numbers? Who's working 34.3 hours? All right, I'm going to wrap it up there. Appreciate you guys hanging out with us. Come back later to hang out with Eric. If you're not a client, what are you waiting for? Come join us. jazzwealth.com. And for the rest of you, thanks for your support. Have a great rest of your evening.